Hey, good afternoon, everyone, and welcome to the PivotBoss Closing Report for March 3rd, 2016. I am Frank Ochoa, aka PivotBoss, with analysis after the recent session here, taking a look at the ES in a daily time frame. You can see here price continues to hold near and at recent highs here after the recent squeeze off of the 1921s. Price has basically built out a kind of a narrow two-day range here. Not a whole lot of price range we've seen over the last couple of days. Today, the ES basically trading just half of what its average daily range is, 53% of average daily range. Crude oil, NQ, both 59% as well. Gold rallying and almost seeing an expansion day at 124% of average daily range. And obviously, the markets could be in a holding pattern ahead of the non-farm payroll number coming out Friday morning. So taking a look at the ES for the most part, the idea here is that expansion outside of this two-day range here opens up the next key move. So bulls can basically keep price above the recent lows here, and we have some support around 65, 66. The implication is for a continuation higher, and we've been pointing to 1983 first, and we got that target, and the next highest level here is going to be 2004. That's the primary weekly bull, or the secondary weekly bull target. So 2004, 2007 could be about where we head higher into the end of the week, but it really could be either way here after the report comes out. So any failure to hold above 65, for example, could roll this thing back toward the HVN at 1921 over the upcoming session or two. So really we have an upside HVN, very minor right here to reach. Then we have the lower one here, depending upon how we break free from this two-day range. Looking at the intraday time frame, you can see prices here basically held the pullbacks throughout the session, held off of 75s and rallied into the 25% weekly expansion target at 1989 quarter, and that's kind of where we closed above that session, just heading into the end of the session here. Again, if price can hold above the 75s, especially above the 65s here, we could be looking at a continuation into the next upside targets here, the primary or the secondary upside target being 2004, and then a 50% expansion weekly target at 2009. Those could be the next upside targets we see. Any failure to hold short term and overnight trading above 1989s could roll this thing back towards 76 heading into that report. So we'll see how that plays out. Now taking a look at crude oil here. Crude oil holding near highs. We're just basically trading around the 34.63 key level. That's very important for how we look at the market here. We have a key range from 40.50 down to 28.76. The midpoint of that range is 34.63, and prices are attempting to hold above that zone. Additionally, you have this balanced profile that's been developing with composite VPOC at 33.44, and prices have been initially rejected off the top of value at 34.97, and if prices cannot find acceptance above this zone here, we could see a push right back to composite VPOC at 33.44, followed by a move to the bottom of value at 30.72. So right now, this is very important to watch for any signs of rejection. Acceptance beyond 35.25 could open up a move into the LVN at 37, which could see a first test fade opportunity. Looking at the intraday time frame for crude oil, here we are. What was interesting during the current session here is obviously we had that major squeeze the previous session up to 35.14, where we saw that major buy imbalance off of 35.10s. One thing that was important obviously is when you get a big impulse move like this and then price pulls back to the midpoint of that range, you have those key levels that come off that level now. And so 34.35 was a key level for us today, and also that 35.14. And today what was very interesting was how price rallied through 35.14s and quickly was not able to find any traction above that zone. We saw buy imbalances here, they sold off. That lower high here had buy imbalances, and that broke this thing back below 35.14. The retest at 35.14 here was also defended, and that opened the door to a move back toward our final target on the day, which was 34.41 to 34.35, because failing to hold above the top of this range implied a move back to the center point of the range and value, and we got that move. So that was very interesting the way that played out. Now, obviously, prices are kind of coiling and holding. So the key levels here, 34.35 to watch. Failure to hold that level would auction price back toward the bottom of 5-day VPOC at 33.53 with a shot at retesting 33.56. Any push beyond 35s right now has been rejected significantly, so if there's any acceptance beyond 35s, that could open the door to a move into those 37s. But again, 35s heavily rejected over the last couple of sessions. Now, taking a look at gold futures here, we saw a significant squeeze. And what we mentioned the previous session was that price continues to be bid and defended in the trigger zone throughout this uptrending market, despite being within this trading range. So we've had higher lows here as we continue to go up, and we just pushed to new highs beyond the 1264.90s. That's the high there, the top of that level. Now, we saw a push beyond that zone and initially rejected, but we saw a clean push through the previous week's high. And now any retest of 1254.30 could offer a buying opportunity for a continuation higher. And the next upside key targets, as we mentioned before, 1282 and 1300.1. So those could be the next upside targets should a retest of 1254s remain intact. So if the bulls can defend a retest back toward this zone, we could be looking at a nice push into these upside targets. Failure to hold 1254 could open up a return back toward composite VPOC at 1233.5. Finally, taking a look at the NQ, here we are. Basically, the NQ pushed beyond the top of its key range at 43.09. That was very important right here. That was the previous session 2 days back, and right here, boom, 2 days in a row, very tightly coiled range, very, very narrow price action. Not quite an inside day, but we do have very narrow 2-day range right here, and holding above the 42.87s could open up that next HVN above, which we've talked about, which is 44.10. So that's what we've been shooting for. If the prices continue to push higher, we're looking for a push into 44.10. Any failure to hold above 42.87 opens up a retest back towards support at 41.91. Looking at the intraday time frame here of the NQ, overall this one here is holding above a very clear area of support, which is the previous week's high, 42.93. That was basically our idea for the day. Our sole idea was to defend the LVN right here at 42.93, 42.95, and that was basically the low of the day. In our trading room, we were looking to fade that opportunity back to VWAP. That was about it. And that was a nice high probability opportunity there that really worked out right on the money. So that was about all you really got today. But overall, we have a very narrow 2-day range here that's very, very clearly defined. I mean, a failure to hold 42.93s now opens up a quick return back toward previous 5-day VPOC at 42.35.5. I think bulls continue to defend this zone, however. Look for bulls to continue to defend for a shot at squeezing higher, because any push through 43.50 opens up the next upside targets here, and we could be looking at 4400 and 44.49. So a big time breakout potential with clearly defined areas on both sides. 42.93 on the bottom side, 43.47.5 on the top side. Watch this range closely. Obviously, we have non-farm payroll at 7:30 a.m. Central Time Friday morning. That's going to be an important report to watch out for. All right, that's it for now. Let's see how this thing plays out heading into Friday's trading. Good luck and trade well.